So you're thinking about getting a vehicle, but you have a decision to make. Do you lease, do you rent to own, or do you go through the bank? Now, I have had experience with most of them, so I'm going to give my take on each of them, pros and cons. My first vehicle was through the bank, second vehicle through the bank, third vehicle was a short-term lease, next vehicle that came after that was a rent to own from rent to own. Now let's start with leasing a vehicle. There are two types of leases in Trinidad Tobago, two prominent types. One, you lease a vehicle for a predetermined time frame, 1 year, 2 years, 3 years, 4 years. You are not leasing the vehicle to own it. You are leasing the vehicle to use it. You have use of the vehicle. The owner of the vehicle, be it the company, they take care of insurance, maintenance, servicing. If you get into an accident, they will replace the vehicle in the interim while your main vehicle is being repaired, if it could be repaired. The biggest pro to that whole arrangement is one, it doesn't show up on your DSR the conventional way, well, at least when I was doing it. And two, it's worry-free driving because the company you are leasing the vehicle from, they handle, like I said, all the maintenance, even your washer fluid, they will top up. You don't have to ever open that engine bay for anything. The con to that is that most times the monthly installments are way higher than the average monthly installments you will pay anywhere else. You are talking about 6,000, 7,000, and these are only really available for companies and corporate customers. You can't just walk into a leasing company and say, hey, I want to lease that Mercedes for 2 years, unless you are part of a business. The second type of lease to own has to be like what eFinance offers up at Lifestyle Motors. Now this is a lease to own arrangement. You are leasing the vehicle, they call it a lease, even though it's more along the lines of a bank loan without the bank, but you are leasing the vehicle for the 5 years, 6 years, 7 years, and for that time frame, you are responsible for the vehicle. Whenever you have to get the vehicle serviced back by Lifestyle Motors, you would have to pay that out of your pocket. If they tell you 1,500, that 1,500 comes out of your pocket. So that's why I say it's more in the line of a bank loan without the bank, because you are still responsible for certain costs to keep the vehicle running. You also still need a down payment like with the bank, and the monthly installments are similar to what you get when you go to the bank. So the biggest pro there is, I guess, if you just don't want to deal with the bank, no legal fees, right? That's the biggest pro there. Next, you have rent to own. Rent to own, again, like I said, I have had experience with that. You go to the place, you pick your vehicle, and the biggest con here is that the vehicle choices are limited. You're not going to get brand new vehicles, you're going to get roll-on vehicles and used vehicles. But let's say I want a vehicle, like in my case, I was in between vehicles at the point in time, and I wanted a vehicle. When there, you pay a down payment, and you pay your monthly installments. For me, the pros here are you don't go through the bank, no closing fees, no extra fees, no hidden fees, nothing. You pay a down payment, you wait if the vehicle isn't here yet, most likely it's already there parked up on the compound, and within 24 hours, 2 days, you're in your vehicle and you're driving. It's convenient. And on top of that, the second set of pros is that you get GPS in the vehicle, and you also get insurance. So for the 4 years or 3 years or 2 years, however long your rent to own agreement is, you don't have to pay insurance. The insurance is covered under your monthly installments. The negative side is that the monthly installments, again, it isn't flexible based on interest rates. It's only flexible based on how much money you put down. So the more you put down is the less you pay in monthly installments. So you would find that the monthly installments here range like 38, 39, 4,000, unless you put down a large enough down payment whereby your monthly installments are a bit lower. But the biggest pro in this rent to own agreement is that it does not show up as a loan, because remember, you did not take a loan. It's just a monthly expense, and you can omit that if you choose to, if you ever go to the bank. So you could quite literally have this vehicle and still get a vehicle from the bank without the bank questioning your DSR. Which leads me into the third way of getting a vehicle in TNT, which is through the banks. Now, the bank offer the most flexibility. After all, you can go to any dealership and purchase any vehicle in any color whenever you want to. That is flexibility. On top of that, you also have interest rates that vary. So if you wait till the right time when the banks have promotions, you can get a really good interest rate, and your monthly installments are fixed and pretty low. And on top of that, the banks have economy of scale. So they are large enough to say we can wait 8 years for our money back, 8, 9, 10. I've seen banks going up to 10 years for a vehicle loan. So the banks win out in terms of versatility, promotions, low monthly installments due to the duration of your loan. They win when it comes to that. But where they lose out in terms of a con, and most people don't seem to look at it like that, is that, well, one, you have to have good credit. If you have bad credit, you can't go there, they will kick you out. But two, is that your DSR is affected. Most people you see right now driving new vehicles, PE series, their DSRs are so high that they couldn't even get an emergency loan right now for a medical expense if they needed to. I'm sure in certain situations you can probably get an emergency loan by co-signing with a spouse or a relative or somebody you live with, but it's the inconvenience. Yes, you have a new vehicle, but your DSR has been affected so greatly that you are now in a position where, aside from a credit card, those are the only two things you could accomplish. And don't even think about going to the bank for a mortgage, because they're going to watch that car loan and say, nah, come back when you finish pay off for this car loan. So if you are in the market for a vehicle, take a look around. Sometimes the bank may not always be the one for you. Sometimes lease to own may not work for you. Sometimes it may work for others. Rent to own may not be the thing for you. It may be the thing for you. Just shop around and make sure you get the best deal.